I'm going to speak to you today about unleashing the power of digital technologies in car insurance. I'm Armin Kia. I'm the co-founder and CEO of Driverly. We are an insurtech business based in Cardiff, Wales, in the UK. And I'm going to tell you a little about our experience in Driverly and also the wider industry trends when it comes to digital technologies. It was interesting to hear so many similarities between Brian's observations and what we see in insurance industry. Very, very different industries, right? But many of the trends are and observations are applicable. And that is the power of these discussions and presentations. There are many applicable learnings to other industries as well. So without further ado, let me quickly introduce myself. My background is in technology, and I did my MBA in Manchester more than 10 years ago. I still had some hair on my head, and yeah, good old days, but it was more than 10 years ago. I joined Admiral Group after that. Never thought I would come to insurance and never thought I would move to Cardiff, but here I am more than 10 years later, still talking about insurance and still trying to make a change in this industry. Why didn't I think I would go to insurance? It's probably one of the most boring industries from the perception, in terms of the perception of the customers, right? It's one of the very few industries where people pay because they have to, but they hope they never deal with, the company they've bought the product from. They hope to just pay you and never see you again. And that in itself means that the customer experience is a challenge in this industry. And I think most of the incumbents haven't done a favor for themselves. The product hasn't changed forever. It has been a quite boring and untransparent product for most customers. And the reason I moved to this was actually to the opportunity to make a change. And Admiral seemed to be a great place to learn. They're the largest car insurer in the UK, very data-oriented, with a great, amazing, open culture. So I worked for them for 7 years, and there I was mainly involved in launching new products and using data and technology for product innovation. And that's basically what I'm doing in Driverly. Started Driverly in 2021 with my two co-founders, these two gentlemen, Nestor and Mohammed, my chief underwriting officer and my CTO. And this photo was after our previous funding round with Jack Christopher from Development Bank of Wales, one of our investors, and Mark Huggins, our chair designate and non-executive director. So I'll come back to the story of Driverly and why we did it, but let's take a quick look at the journey that we've taken, the industry has taken in terms of moving to digital. So in 1990s, this is probably how you would buy your car insurance. You would go to a person you trusted, and they would explain what cover you would need and the best deal you could get. And you'd be surprised in how many countries this is still the dominant model. If you've been to Spain, you probably know El Corte Inglés, one of the major department stores, and in most of their stores there's a section for seguros, which is the insurance. You can go there and sit down with someone to buy an insurance policy. But this started to change in early 2000s. Many companies moved to call centers. Direct Line was one of the main ones in the UK, the early ones. Admiral was a fast follower as well. And slowly in late 2000s, we saw more and more websites coming up, and online sales started to pick up. And in 2010s, we saw the price comparison websites, the aggregators, to become more and more dominant. And they brought a level of sophistication to the digital journey. Sophistication in terms of technology, not necessarily from customer perspective. They solved a very important problem for customers, which was choosing the best deal in a very transparent journey. So if you've never bought car insurance in the UK, basically how it works on these aggregators is you go to their website, you answer a number of questions, maybe 30, 40 questions. They collate all of the data, they send it to the insurers on their panels, and they get back the prices. They sort these prices and show it to you, and you can choose the best deal for yourself. Very transparent and a great way to, choose the best deal for yourself. Usually it is down to price because at the moment, it's a very homogeneous sort of product, very little differentiation, which is one of the challenges in this market from my perspective and from CX perspective. But that has driven the success of the aggregators. We're less than halfway through 2020s. Is it going to move to other channels? Most households have a version of voice assistant in their home, Alexa, and in their cars as well. Most new cars have very smart entertainment systems. So who knows where you can buy car insurance going forward, but I think the pace of change is increasing every year. So the sky is the limit in terms of how it can change. Now, so far, I haven't told you much, right? I've told you that there's more and more digital sales, but we knew that already. It's nothing unique about insurance about that, and nothing I would say too informative. So what is unique about insurance? I'd like to do something daring. Let's see if it works. I want to open up to a question right here during the presentation. And my question for you is, how is selling shoes different to selling car insurance? I'm going to see if it works. If it doesn't, I will just answer it myself. But anyone, you can pick up or open up your mic, or you can write your answer in the chat. Shoes is choice, insurance is a must. Andrea, that is correct. Car insurance is a must, but not all the other insurance policies. You can choose to buy home insurance or not. Shoes makes you feel better. Well, yeah, buying insurance, especially car insurance, doesn't always make you feel better. Fair enough. You can't go to a comparison site for shoes. Well, you pretty much can, right? If you go to any of the online shops, department stores, for example, here in UK, they sell you a lot of, a comparison of different products. Or Amazon does that very well as well. Not necessarily shoes, but goods. Insurance is a non-physical service. That is right. That is certainly a closer to what I was expecting. So service versus product, we know the difference. That is one of the differences. Shoes need to fit your foot personally. Good point. Most of the insurance policies are not very customized. They're very off-the-shelf standard products. Someone said insurance is a liability. I'll come back to that. I think we need to talk about that in particular. You can't try before you buy. Well, maybe you can, Hans, but we'll come back to that as well. You can see and show the shoes you wear. You don't see the assurance and no incentives to show it. Good point about that point. The tangible aspect of a shoe that you don't have with insurance. My background, price, but not for shoes. Yeah, so price is, let me read it properly. My background and other attributes determines the price, but not for shoes. I think we're getting very close to what I'm trying to get to. I will pause here because there may be more comments coming up. But for me, the main difference is when you're selling shoes, you sell something, you give the customer the product, and you get the money back. With insurance, you sell protection And in return, you're taking a risk. There's no element of risk when you're selling shoes, right? The more the better. Sell it to as many people as possible and you'll grow. In insurance, you're taking a risk. So a very important part of that journey is to decide who I want to have on my cover and who I want to, and how much I should charge them for that policy. So someone mentioned in the comments, my background determines the price, because your background determines your risk of accident. And that is part of the sales journey in insurance. And protection is what you're selling. So we shouldn't forget that. We should come back to it in terms of the value proposition to the customers. So how is the digital technology changing this? With this context, how is it changing the customer experience? For that, I need to tell you a little about Drively and how we're driving that change from an insurtech perspective. So we are an insurtech based in Cardiff. If you've never been, it's a beautiful city. And our mission is to make car insurance work for safe drivers. I mentioned safe because, again, we talk about risk. We try to make it work for safe drivers in a way that it hasn't in the past. So what is the problem in this market? We talked about the challenges in terms of the customer experience and the product itself being boring, unfair. No one wants it really unless they have to. But there's also a problem in terms of prices. In the last year, the last 12 months, we've had 50 to 60% increase in prices. And in particular, the young drivers pay around 3 times more than the rest of the market for their policies. In most cases, the cost of car insurance for young drivers is more than the cost of the car itself. So there's a big problem there to solve. And as I said, the product itself is not great from customers' perspective either. The level of trust in the big brands is less than 40%, appalling. And in terms of the perceived differentiation, again, very, very low score. So the market is ripe for disruption. And the way we're going to change that is by bringing car insurance to the 21st century, all the usual suspects, right? AI and machine learning, Internet of Things, and digital gamification. And our solution is an AI-powered car insurance subscription. What does it mean? It means all you need is your mobile phone. We provide you with a one-stop shop on our mobile app for everything related to your car insurance. It's app only. You don't need to call anyone. You don't need to pay a visit to anyone. Everything from sales to the in-life policy management happens in the mobile app. And we gamify your experience with car insurance. We try to incentivize you for your good driving. And we create a win-win-win solution doing so. You win because you will have fewer accidents. We win because we pay less for your accidents. And the whole society wins because we'll have a little safer roads as well. But that's not all of it. We provide you with the most dynamic product in the market through our monthly subscription policy. It's not an annual policy, which means you can leave us if you're not happy as a customer. Maximum flexibility, no cancellation fee, no admin fee. But we hope you stay with us. It also offers great flexibility from underwriting and pricing perspective. We talked about risk, right? It's all about assessing your risk and reacting to it more dynamically than the market. And we do that with monthly subscription. We don't have to wait for a year to adjust your price based on your driving behavior. We do it every month based on the market conditions and your driving behavior. So what does it mean to the customer experience? The numbers you would see in the background are based on the research we've done to our customers. Sorry, it's not our customers, to an unbiased general public audience. So what do we offer on the app in order to engage with customers? So the first point is we offer transparency. In most cases with incumbent services, customers don't know what's going on. They pay for their insurance policy and, nothing happens, they hope nothing happens and there's no accident. Next year, they will see an increase or decrease in prices. They are not in the know. We break that. We try to create transparency. We show them the driving score, but also all of the components of it, your speed score, your acceleration, your mobile usage while you're driving, your cornering, driving at night. And we give you personalized feedback on what you're doing well and what you could do better. So we try to improve your driving behavior very actively, and we make it very transparent. We also incentivize you. We reward you if you drive well. We give you what we call acorns. Our mascot is a squirrel who loves acorns. And if you get to 100 acorns, you can get Amazon vouchers or cashback and discounts and so on. So we put the money where the mouth is, and we try to give you a reason to improve your driving behavior as well. As I said, we create a one-stop shop. Everything related to your policy, you can do it here. Review and amend your policy details. You add a new car, add a new driver, add a new add-on product, everything with a couple of taps on the mobile app. Very easy. And we have introduced a concept called Driverly Club. Basically, it's an opportunity to save more with your family and friends. The idea is if no one in the club makes a claim, everyone gets a lot of acorns, a lot of rewards. And the longer that streak of no claims, the more you will earn in terms of your rewards. There's a leaderboard as well, so people compete with each other based on the driving score. If you come on top, you earn more rewards as well. And all of this is designed, going back to the very starting point, it's designed to achieve the purpose of the insurance policy, to protect you better, a bit more proactively, to make you a better driver, by giving you feedback, incentivizing you to become better drivers. And in this case, in Driverly Club, by using social pressure, peer pressure, to improve your driving behavior. And also helps us with risk selection as well, right? We try to bring better drivers to your club, and that benefits us because we'll have better drivers on our book. So it's a win-win-win solution. And as I said, we offer a monthly subscription policy, no cancellation fee, no admin fee. There's a price lock for 3 months, just to give the customers a bit of peace of mind that the prices don't change too frequently. But after the 3 months, the prices can change based on your driving behavior and market conditions. And that's great flexibility for customers and for us from underwriting and pricing perspective. Now, let's have a look at how all of these features result in a better customer experience and customer engagement. Our app is live on both iOS and Android devices. The numbers are a bit outdated, therefore 31st of March, but we've had, I think, more than 4,000 downloads now. Many of our customers come from Driverly Club. So this is a referral mechanism, and more than 60% actually of our users come from this referral channel. So it's not only a great opportunity in terms of organic growth, but it's an amazing opportunity to get the good drivers in and have a positive selection in terms of the customer risk as well. We talked a lot about engagement. The proof is in the pudding. Are customers actually engaging with the app? The short answer is yes. We were overwhelmingly surprised by the results. So customers spend more than 10 minutes on the app, and they come back to the app more than 20 times. So that for me is probably one of the most important learnings we've had since we've launched our proposition. And in the background, we gather a lot of data. So 1 million miles is to the moon and back twice. That was end of March. Now we have more than 4 million miles of driving data. And that is very important, significant in terms of training our AI models in the background. And the next question is, okay, if you're engaging with customers, is it actually leading to an improved driving behavior? That was the hypothesis, right? And the short answer is yes. The green line here on the chart shows the driving score in time. So the longer you're with us, the more to the right on the chart you would be. And you can see that the customer's driving score is improving in time. And it's improving reliably as well, because the reliability of the score is increasing. The purple line is the score variability, which is going down, which shows customers' driving behaviors stabilizes after some time, but it stabilizes in to a better driving behavior. So very interesting learnings, and that is again going back to the points that Brian and Mohammed mentioned. The engagement with the customers have to be a part of your core strategy and your core product design and the core business design. Now, we probably don't have enough time to go into details of this, but when we talk about digital technologies, it's easy to just focus on what is visible, right? The app is nice, it looks good. I can show you screenshots. The more complex part of the job happens in the background. So in our case, we have 5 layers of AI-powered risk pricing technology. Selling insurance to you digitally is all about assessing your risk and reacting to it dynamically. Can I do that better than anyone else? And we believe the short answer is yes. We have 5 layers, as I said. Very, very briefly, we start with your demographics. That is what everyone does. But we start at a very high point there. We use more than 120 data points that we gather about you. Some of them are direct questions. Some of them are external databases, more than 20 external databases that we use to enrich your data to learn more about you. Check the fraud databases and credit agencies and so on. And we use all of that to form a view of you as a customer. Then we add your driving score to the equation. And all of our customers come with that driving score at a frequency of 1 Hertz. So every second, we capture a driving behavior snapshot. The third layer, we believe is unique to us, I haven't seen anyone else doing it, is augmenting your driving data to the driving context. So using live weather data and road risk data to learn more about the journey that you were on. The intuition tells us, if you're driving 50 miles per hour, is it good? Is it bad? It depends on the driving context, right? What time of the day it was, and how was the weather, and how was the road that you were driving in. Competitive price calibration is basically looking at the rest of the market. What are they doing, and how much they're going to charge you to the best of our estimates. And we can adjust our prices accordingly. And then, of course, the 5th layer is to complete this loop and retrain the models based on the new claims data that comes in. The reason I thought to mention this was digital technologies go much deeper in AI and analytics than what is visible on the surface. And I think Brian had a very important point about the culture, and the team, the sort of team you need to drive change from a technology perspective, from digital perspective, is very different to your traditional teams, I would say. And I think that was very much reflected in our co-founder team. So when I started the business, I did it with my CTO and my chief data and underwriting officer. So we've built everything ourselves. So Mohammed and the team have been amazing in building a proprietary technology for ourselves, which gives us agility in making change with no dependency on third parties. And Nestor is responsible for everything related to our data science and AI technologies. And they're both very well placed to drive all of that. And between the 3 of us, we cover customer data and technology. We bring together those 3 elements. And Mark Huggins, former NED of Admiral, joined us as of May last year as well. And between us, we formed the board of the company. And with that, I'd like to conclude, and more than happy to take your questions.